Bitcoin has reached a new all-time high of $106,000, and in this video, we're going to answer the question of whether we're at a market extreme, whether that's due to breaking above the structure or hitting the second institutional target of an entire reaccumulation process. In this video, I'll explain what all of this means and how it could impact crypto in both the short and long term. Without a doubt, we're all thrilled to see Bitcoin reach a new all-time high. It feels like just yesterday when Bitcoin hit $104,000, a number still fresh in our minds. But today, the price has climbed even higher, reaching $106,000. This is a level we've been anticipating and watching closely for weeks now. Why? Because we've been analyzing how smart money in Bitcoin has initiated a bullish reaccumulation process. In simpler terms, they've been steadily accumulating long positions within this range. And as we know, these large institutions often guide an asset's price to specific levels where they can take profits from either an accumulation phase or, in this case, a reaccumulation phase. We previously identified the first institutional target, which was hit in what we can only describe as an impressively precise and almost artistic manner. Once this target was quickly surpassed, it became clear that it was only a matter of time before the second institutional target would be reached, something you can now see on your screen. Let's also rewind to when Bitcoin was testing the upper boundary of this channel, back around November 11th of this year. At that time, we shared in previous videos that we expected this channel's ceiling to break to the upside. We even predicted we'd eventually need to remove that structure from our chart entirely. And while we're still leaning toward that scenario, for now we're keeping the structure on the chart just in case. However, we don't believe this impulsive movement is a trap, as the separation from prior levels is simply too significant to ignore. That said, we're staying cautious. So now, the big question everyone is asking, are we still optimistic about the crypto ecosystem? Should we keep buying, or is it time to sell into this rally, as the average retail investor typically does? Or should we follow that approach and sell everything on the way up? Let's answer that by analyzing several key assets within the ecosystem, and of course we'll wrap up with our thoughts on what's next for Bitcoin. Let's begin by quickly taking a look at the SHIB 500 chart, the benchmark index of the American market, and noting that we're currently sitting at an all-time high. This is an incredibly positive level for the traditional market, and honestly, there's not much more to add here. The key takeaway is that financial markets are in excellent health, as clearly reflected by the SHIB 500 performance. If we shift our focus to the Nasdaq, the tech-heavy index, and as we mentioned in the previous video, MicroStrategy has now been included in the Nasdaq index. We can see that its performance is also in an ideal scenario, reaching new all-time highs. Now, let's reflect on how many times we've discussed the Nasdaq and the SHIB 500 in situations like these. And how many times have we asked ourselves if it's wiser to buy or sell at an all-time high? As you can see, I'm highlighting each instance where a new high has been surpassed. If you consistently bought at all-time highs and never sold a strategy, that's not typically recommended. But stay with me here, you'd notice things tend to work out pretty well. In fact, it's often more prudent to keep buying at all-time highs like a fearless optimist than to attempt selling and betting against the index. With that example in mind, I think the point is clear. Now, let's revisit the idea that we're sitting at an all-time high once again. This makes it reasonable to avoid trying to sell at this level. So, understanding that both the SHIB 500 and the Nasdaq are thriving in a phase of financial prosperity, we can conclude that the markets are in a very strong position. Let's take a look at the newest addition to the Nasdaq index, none other than MicroStrategy. As you know, we closely follow this company because of its well-known love for Bitcoin, demonstrated through its massive Bitcoin purchases. This is why the correlation between MicroStrategy and Bitcoin is so significant. So what does MicroStrategy's chart tell us? Well, it's something you can spot at a glance. We're in an uptrend. If we analyze it a bit further, we can see a bearish impulse followed by a complex corrective pattern. Here's the W, here's the weak Y, and this entire structure forms a Z. This Z hasn't fully played out yet, but as we always say in these videos, don't try to fight these types of structures. Instead, prioritize the continuation of the trend. It's a strategy that always pays off better in the long run. Now that we've reviewed what the traditional market and MicroStrategy are signaling, both of which strongly correlate with Bitcoin and give us reasons to remain optimistic, let's move on to analyze the rest of the cryptocurrencies. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
let's talk about Ethereum. Take a look, you're seeing its price action in its entirety on this daily time frame. Notice how, after experiencing a significant drop back in October 2021, we went through the whole bear market phase. During that time, major institutions began an accumulation process, setting the stage for its price to rise. This isn't news to you, You already know this. From there, we saw how this strong upward move pushed Ethereum's price to nearly reach an all-time high. But as life would have it, or rather as corrective patterns would dictate, which is what this is all about, Ethereum needed to correct. After breaking through the Z trendline, which we tend to obsess over, it had to seek out the opposite trendline. Here we can see that process, and what's interesting is that the price hasn't even attempted to complete this bearish replication here. Because let's face it, that simply hasn't happened. What this is showing us on Ethereum's macro levels, something we've analyzed before, of course, but we're revisiting now to put investors into context, is that Ethereum is signaling weakness on the seller's side. The sellers are weak. This is the message that needs to resonate, and that's exactly what we've been saying all along. But now that we understand this bearish replication has failed in its attempt, what else are we seeing? Well, as you know, the market is fractal. On one hand, we can observe a full accumulation process here, pressing against or compressing into a key structure. That alone was already inviting us to maintain a positive outlook. But take a closer look at this. Here we also have an entire bearish impulse. And as I mentioned, the market is fractal. What we see here is a complex corrective pattern. And once again, we find ourselves within a Z structure. It's important to remember that in cryptocurrencies, the most common corrective patterns, by far, are the complex ones, and they often end in a Z. Now, this Z, by its very nature, can last for an undetermined period. And here's the key: you don't want to be the smart one trying to predict precisely when this Z will come to an end. In other words, don't try to reverse it. It will happen eventually, there's no doubt about that, but not as a result of this drop. Instead, it'll happen when the Z itself stops climbing. But it's better if you're not the one trying to catch that V-shaped reversal. Because those who tried to flip the Z into a V by selling, well, you already know what happened. They hit their stop loss up to 15 times. Now, do you still want to keep selling? Are you sure? Personally, I wouldn't take that risk. Here in Ethereum, with this defense zone, what we're seeing is that as long as it's not breached, we can confidently say that this C structure remains intact and highly positive. Therefore, Ethereum is still bullish. Similarly, with BNB, what you're looking at here is a macro accumulation process. There's a bullish impulse. And if you take a closer look, it also forms a Z. Here we have a bearish impulse, and to its right, a corrective structure. This is a W, a weak Y, and the rest is a Z. A Z whose trend line was completely hidden, but we identified it through Ethereum, BNB, and MicroStrategy. Thanks to cross-analysis, we figured out where B.N.B's line was, leading us to believe this would turn into a trap, and it worked out perfectly. But the message here is simple: this Z is still ongoing. So, on a very macro level for BNB, this is really macro. As long as it holds above 493, we have to stay positive. Now, if we zoom in, we can get a better view of where the wedge is and where the trend line passes through. For now, we're focusing on this level. As long as the $143 price level in BNB isn't broken, hey, even if a trap comes along, it wouldn't be a big deal. But as long as that level holds, the market is telling us to remain positive for the time being. Something very similar is happening with Solana. You're looking at its full chart on the daily time frame, and it's the same story. There's a strong bearish impulse followed by its corrective structure, which I won't even bother labeling. But it's a complex corrective pattern that ends in a Z. Here we can see the Z's trend line, which was never breached. So don't try to reverse a Z. And here we have its continuation. Now, if we zoom into the present, what do we see? Exactly. The market is fractal. Here we have another bearish impulse, followed by a W, a weak Y, and once again, a Z. Thanks to the market's fractality, we identify yet another Z trend line. This tells us that as long as this trend line isn't broken, we should remain positive. But watch out, there's a double reading here. I'll also tell you that it wouldn't surprise me to see this structure break. This is based on cross-analysis. I'm simply saying it's possible for it to be lost. And if it happens, it wouldn't be a big deal. As you'll see when I explain Bitcoin, there are other structures holding just a bit lower. This makes us think that with Solana, we can also take a more flexible approach and say with more confidence that as long as this more macro structure, around $125 holds, we can remain bullish. Now, in the short term, if this zone were to break, honestly, it wouldn't scare me. That said, the market will also tell us what's next. If it doesn't break, and this is something neither we nor anyone else can predict, if this area holds, the market's momentum and aggressiveness could be very strong. But again, that's for the market to decide. Still, I wouldn't be surprised at all if we see that structure break. Even so, I'll tell you this, we remain positive. That's the only thing that should matter to you. If you take away something different from this video, that's on you. We're telling you we're bullish. Now, let's dive into Bitcoin's chart and understand why this is so important, why breaking above the macro bullish ceiling and reaching the second institutional target matters so much. Let me explain, but first, Let me remind you that registration for our private channel, Crypto Insight Premium, is still open. In this exclusive space, we provide daily live technical analysis of the market, along with updates that we believe are key to staying informed. It's also a place where we share trading ideas and feedback, allowing us to grow as a community and continue learning every day. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI. Have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us. We're waiting for you. Now, regarding Bitcoin, yes, the price has already broken above the ceiling of the bullish channel. As I mentioned earlier, and it's recorded, when we were breaking through it, we told you what we were expecting. Back then, given our bullish outlook, we anticipated that sooner or later, the market would show us that this structure needed to be eliminated, and that's exactly what we aimed for. And as you can see, that's where the market seems to be heading. So, it's likely that in the next video, that ceiling will no longer be part of the chart. We'll see, but I wouldn't give it too much importance because what we don't want to do is limit the market by assuming it's going to drop. This time, we're not prioritizing that scenario, thanks to cross-technical analysis. Now, it's true that the price has reached target 1 and has now hit target 2. Yes, this is a clear sign that smart money is taking profits, which also makes some kind of corrective pullback logical. That's what we're working with right now. Those Z trend lines appear in many assets, and in the case of Bitcoin, we have this defense zone around $91,706. As long as the price doesn't drop below this area, we can say that we can remain calm and continue prioritizing the bullish direction in the crypto market. Remember, Bitcoin is also forming a Z, which attempted to break its Z trend line but ended up creating a trap. Therefore, the Z pattern continues. As I mentioned earlier, it's better not to try to be the smartest person in the room by attempting to predict exactly when this will reverse. As you know, there were plenty of opportunities to try and turn the market around, and it seems that in all of them, the idea didn't exactly work out. I hope the message is clear. If you enjoyed this advanced technical analysis, let me know in the comments. Don't forget to like the video, subscribe to the channel, and click the bell icon so you don't miss future analyses. Also, share this video with your friends and other trading and crypto communities so more people can improve their strategies. Best of luck with your positions and see you next time.